please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Samara Abdi, and cruising along with gains of about 0.5% on the benchmark indices. The Nifty is now higher by close to about 55 points. The Sensex having gained close to about 200 points. Awaiting numbers from HDFC Limited as well as Kotak Mahindra Bank. Those two will be the big ones to watch. Hi. Let's address the markets right now. Oil marketing companies are moving higher. So HPCL, BPCL virtually trading at 52-week lows in a downtrend for the last many days, but now showing a bit of an up move. So HPCL and BPCL have seen a recovery of close to about 1.5% to 2% from the low point of the day. Rajat Bose joins in to talk more about the market technicals. Hi Rajat, good start to this truncated week, to this Monday. Your thoughts on the Nifty?
Well, what I would say is that it has come to a very critical level of 10,750. And this level of 10,750, if decisively taken out, then the next level to watch out for would be 10,780. And once that is also taken out, then you can look forward to 10,900 or so. My point is that as of now, if it were not to fall below, say, 10,695, the last close, I have a feeling that probably we would continue to see this upswing continuing, and it will hit those levels of 10,780 or even 10,900. That's a likely possibility now, and especially with banks and IT, both sectors are firing. The levels of 10,900 could well be there even during this week.
Hi Rajat, good afternoon. What are the stocks you're looking at?
I'm essentially looking at two stocks. I have used their May futures levels. TCS May futures stop below 35.14 and target will be 35.75. And L&T Finance Holdings, I would buy with a stop below 170.50. 170.50 and target will be 177.80. Essentially recommendation for the day, but if needed, carry forward them to the next trading session on Wednesday. Okay,
thank you Rajat for that. By the way, PC Jewelers continues to remain under pressure, so now the stock is down close to about 10-odd%. Let's get the intraday chart up for you on your screen. There is a board meeting which is scheduled later this week. As you can see, a minor nick coming through on PC Jewelers, now down 12.5%. Shriram Transport Finance has reported a strong quarter in terms of the balance sheet growth, while the disbursements were at a record high. Umesh Revankar, the MD of Shriram Transport Finance, says the company will add another 200 branches in FY19, which will drive loan growth.
This year, we are looking at anywhere between 18 to 20% AUM growth, and we should be very comfortably able to reach that number, because one thing is we have added 295 branches last year and going to add another 200 branches in the next financial year. We had a higher disbursement of a new vehicle last quarter. In spite of that, we are able to maintain the net interest margin at 7.52. So we should be able to maintain this level in spite of increase in the borrowing cost. Borrowing cost, we expect it to increase anywhere between 50 to 60 basis points for the entire year.
Shree Cement's Q4 numbers were in line as well, with the top line beat on the back of higher incentives being included in the top line. Margins, however, were compressed this time around due to a rise in raw material prices. We caught up with H.M. Bangur, the MD of the company, earlier this morning, and he says that going forward they expect good volume growth and that the increased prices were due to a sudden shortage in petcoke.
Economy is doing good and backlog of demand is there. We expect 9 to 10% growth for Shree Cement in volume terms. Power and fuel costs have peaked out. Suddenly, some petcoke crisis has come. So whatever stock of petcoke we had was not usable, and we had to purchase the in emergency coal from the nearby sources from traders. So the power cost increased tremendously.
Let's talk about some numbers then. Jindal Stainless posted a mixed bag in Q4. Their operating profits saw significant growth, though margins have come off a bit. Anurag Mantri, the CFO of the company, now joins in. Mr. Mantri, good afternoon. Thanks very much for joining in. To begin with, let's talk about your sales volume guidance. First up, for FY19, what are you looking at? What was your capacity utilization for FY18, and what's the outlook now for the coming year?
Okay, good afternoon. So if we look at sales capacity utilization, currently we are close to 100%, just below, marginally below 100%. And but as you know, most of our plants are world-class plants and made of almost European equipment. So we certain debottlenecking and very minimal capex, we can actually increase the capacity by another 20%, 15 to 20%. So what we are expecting in FY19 is the sales growth of around 15%. Should be our revenue growth is achievable in FY19, because once we do this debottlenecking during the year, so we are pretty confident that we should be able to have a sales growth of around 15% in FY19.
Okay. What about FY20 then onwards? Will your capacity continue to be a constraint? Because on account of that, your sales growth in FY19 at 15% guidance will still be less than the 25% that you know, in terms of a revenue growth in FY18. So if you could walk us through the company's plans in terms of expanding capacity from here on.
Yeah, so let me say this way. When I said FY19 is around 15%, it's what we say is the minimal achievable, depending on when we complete the debottlenecking. So there is a potential of going up then more than this percentage. And as you are rightly said, that as we are nearing to the capacity utilization, we are surely looking for a further capex expansion. Obviously, this will be subject to various approvals from the various authorities and regulatory authorities as well as the lenders. But what we are looking, but as you know, we have a huge operating leverage in our Odisha plant. So with certain minimal capex, we can actually double the capacity of our melting. So with just 400 to 500 crore capex, we have a potential to double the melting capacity from 1.1 to from 0.8 to 1.6. So let me give you the numbers like this. So we have a 0.8 million ton of the stated capacity, which we are nearing to the almost full utilization. We can, with certain debottlenecking, we can reach to a 1 or 1.1 sort of capacity utilization during FY19. And once obviously we will also firm up our plan in next 6 months time in terms of the new capex, which can actually double the capacity to almost 1.6 million ton. So in a period of say by FY20. So obviously I'm saying this all with, we still need to do a lot of work in terms of our various approvals and the planning. But the Odisha, as you know, there we have a huge availability of land. We have all the infrastructure ready in terms of the utilities, in terms of the roads and power, everything. So with very minimal capex, we can actually double the capacity, and we will surely looking to actively use this operating leverage. It shall have a tremendous growth in our top line.
Okay, let's talk about your margins for a bit. For Q4 and for the full year, your margins have come off a bit. What would you say are the average sustainable volumes for FY19? Margin, sorry.
See, margin in stainless steel, broadly it remains in the range of say 11 to 14%. I think that's what the range is going to be, because that's what generally average range. Obviously we sometimes get a higher margin, but I think on an average, as a guidance I will give you, this is going to be a margin range in terms of stainless steel, in terms of JSL overall.
Mr. Mantri, you spoke about how the company...
So in a quarter...
Go ahead.
Yeah, go ahead. So in a quarter, see, sometime the best way to look at the margin is full year basis, because stainless steel we have multiple grids of products. Also, our strategy is to right now is to penetrate markets with the more in the volumes, and especially going to the segment which we were not catering earlier. So the margin is not a focus right now, and obviously as I said, the 11 to 14% is what we will continue to maintain. But the sales growth will be very high. So in terms of, as I explained, so that will help us into have a good PAT level bottom line in terms of overall growth.
Okay. Mr. Mantri, you spoke about how with a minimal capex of 400 to 500 crore, you can increase your capacity from 0.8 million tons to 1.6 million tons. How will you fund this 400, 500 crore? What is the current debt on your books, your average borrowing costs, and your plans with respect to the debt?
See, we will mostly look, this expansion will obviously take 18 to 24 months, and our strategy is not to have increased the further debt. Our strategy, as you have been seeing, we are consistently reducing the debt. And we will not fund this from the debt. This will be funded from internal accrual, or maybe at appropriate time, if the market is there, we will look for some of the equity infusion in the company. So it will, surely that there would not be any debt in to fund this expansion, and we have a good internal accrual also. We will look at appropriate time that from the equity infusion, from the equity market, if we can partially fund this. So overall, we will not increase the leverage. So if you see, last year we have repaid almost 900 crore of debt. This year also again we are targeting to repay another 800 to 1000 crore of debt.
All right, we'll leave it at that, sir. Thanks very much for joining in. So that's the word coming out from Jindal Stainless, looking to increase capacity and saying that this capex will not be funded by taking on more debt. The stock, though, at the low point of the day. All right, on that note, let's also hear out from some more companies which are in the news today. Indian IT services company Mindtree has hit a record high, and earlier spoke with Rosto Ravanan, MD and CEO of the company, to trace the future roadmap of both the company and the IT services sector. Let's hear him out.
I think we are close to the inflection point at a Mindtree level, and I think the industry as a whole will also hit that inflection point fairly soon. If you look at last year, Mindtree grew approximately 9%, but my digital business grew about 18.5 or 18.8% there. So digital is growing almost 2x of Mindtree. It's compensating for either a price commoditization or a price pressure, etc., that we are seeing in some cases, or where we have voluntarily cannibalized volume significantly and therefore created value for customers, even if we sacrifice our own revenues there. So we are close to that inflection point where the takeoff of digital will compensate for the drag on the traditional services. Bottom line growth will be faster than the top line growth. We've seen that in Mindtree, and we're beginning to see that in the rest of the industry as well, with larger portion of digital. Digital typically tends to be more profitable for many reasons, etc. So everybody's bottom line will grow. The Indian IT industry, which includes obviously the domestic firms plus the MNCs who operate in India and the global capability centers which are in India, etc. Defining the Indian IT industry at a broad level, I think there's a high degree of confidence that the industry will probably triple in the next 10 years. The industry is approximately $150–160 billion industry today. I think the industry will become easily $450–460 billion in the next 10 years.
Airways is flying high. It's a gain of close to about 4%. So while Indigo is sulking in trade today on the back of the top guy exiting, Jet, it's been its benefit, Jet Airways continuing to climb higher, a gain of close to about 4%. Axis Bank is also under severe pressure, extending the fall now below its 200-day moving average, below its 50-day moving average. The stock is down close to about 4%. But the big one that we will be tracking today will be HDFC Limited. The company recently raised close to about 13,000 crore of capital in Q4 of FY18. We'll get Abhishek to detail in the numbers and the expectations. In the meanwhile, let's talk a bit more at Indigo. Ramdev Agarwal and Motilal Oswal remains optimistic on the company even after the top tech shakeup. In an exclusive chat with Yash Jain, he says that every correction on the stock should be used to buy into the stock.
As I said even yesterday, that Aditya Ghosh had been the face of Indigo. We have interacted with the finest person and most capable leader of the aviation company.
Right.
But it is not, see, in businesses what matters is the strategy and the whole team. And he was one of the very important part of the entire team. So the team is still intact, and I hope they will be able to repair the damage and get as competent a guy And if you don't get as competent, you split the role and get two guys. So 1 + 2 might be bigger than, Mr. Ghosh. So, but I don't see Indigo is much bigger than any individual for that matter.
Absolutely.
So my sense is that yes, a market may react it negatively. They have already done it on Friday, Monday again somewhat. But if by chance if there is too much of panic or something like that, I think it's a terrific opportunity to buy. I don't think the prospect of the business or the company has anything to do with one individual, and it is not going to change.
So what you're saying is the development which we've seen yesterday, as a fund house, you remain bullish on the stock.
If it was a 24 karat gold till Thursday, it remains a 24 karat gold on Monday also.